Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. It's been another big week of insider trading in the nation's C-suites, and once again, the vast majority of that has been on the sell side. There have been 3 deals that have topped $200 million in value with Jacobs Private Equity, an investment company associated with Brad Jacobs, the chair of XPO Logistics, selling down its entire holding to raise $384.85 million. Though the transaction was part of a pre-planned placing coordinated by Goldman Sachs, Citigroup, and Barclays, so it didn't come as a complete surprise to investors. The deal had initially been proposed at $138 per share, but was ultimately transacted at $133.86, almost a $5 discount to the original placing price. 2 other significant sales hit the tape in recent days. Chair, President, and CEO of Luminar Technologies, Austin Russell, turned some of his considerable paper fortune into cash through the sale of 10.5 million shares in the laser technology company at $21 per share, raising $220 million. Mr. Austin was named by Forbes as the world's youngest self-made billionaire following Luminar's reversal into a SPAC, or Special Purpose Acquisition Company, in December last year. Meanwhile, one of technology's old stagers was also in selling mode. Michael Dell, CEO of the eponymously named PC manufacturer and retailer, sold more than 2 million shares at $100.05 in his namesake, liberating just over $200 million. Though with a personal net worth estimated to be over $50 billion, he's unlikely to need the cash. We continue to be cautious about companies where senior executives and founders are significant sellers, and whilst it doesn't exclude us completely from buying into those businesses, it certainly gives us considerable pause for thought. Not every transaction has been in red in recent weeks, though significant purchases have been few and far between. One that does stand out, however, has been insider buying at Asana Inc. Asana is a software company that creates tools for collaborative working and integration of teams and workflows. Asana and its peers in the sector came into their own during COVID, a time when teams and individuals worked remotely and away from central office spaces, the perfect environment for the use of collaborative multi-user workflow tools. Asana has notched up a 20% growth in customers over the last 15 months, with the number of businesses using their tools jumping from 82,000 to 100,000 in that time period. Asana is a relative newcomer to the stock market, having been introduced as recently as September 2020 via a direct listing without raising any new cash. The company listed with a reference price of $21 per share, though they traded up to $27 on day one and have been as high as $71 per share this year. Founder, president, CEO, and chair of the company, Dustin Moskovitz, is the major shareholder in Asana with a stake of some 35% of the business at the time of listing. And he has seen his personal fortune grow substantially in line with the company's share price. He is now thought to be worth around $24 billion thanks to the stake in Asana and a 2% holding in Facebook, which he co-founded. But unlike his opposite number at the social network, Dustin Moskovitz is not cashing in. In fact, he's been adding to Asana holdings and has been doing so over recent weeks. His latest purchase was of 160,000 shares at $63.34, representing an investment of $10.133 million. But that was just one of 18 purchases that he has made in Asana stock since June 7th. In total, he has bought 3.15 million shares at a cost of $162.94 million. Those purchases have an average cost of $51.73 per share. An entry level that looks very attractive, even with the stock ticking down from recent highs to trade around $65. What's particularly interesting about the rally in Asana's share price is that much of it has come since the middle of May, which could strike you as counterintuitive given that the economy is beginning to reopen, with people likely to return to their offices for at least some of the time. What the recent price action is telling us, however, is that the market believes that working practices and technologies used over the last year and a half are going to be retained and not jettisoned as we reopen. That's because they have played a significant part in making businesses far more efficient, robust, and flexible than they were prior to COVID, and therefore collaborative working across multiple locations is here to stay. Duskin Moskovitz must presumably believe that this is the case as well, and though Asana shares have had an extraordinary run-up, the company has forecast future revenue growth for Q2 2022 in the order of 56 to 60%, whilst keeping a lid on losses, which are likely to jump from $42 million to $44 million in the current quarter. Just the sort of numbers to get growth and momentum investors very animated indeed. That's all we have time for today. Please make sure you do your own due diligence before making any investment decisions.